Yesterday, US inflation data was in the focus of market participants. After the report was released, volatility soared. The euro showed mixed dynamics as statistics met analysts' forecasts. On the one hand, data fuels hopes of those who count on lower interest rates this year. On the other hand, those who bet on further monetary policy tightening believe that the latest figures allow the Fed to remain comfortable with its aggressive rate hike path. This in turn may lead to a continued rise in the greenback and weaker demand for risky assets, including the euro and the British pound. The US Consumer Price Index fell by 0.1% in December from a month ago. On an annual basis, consumer prices climbed by 6.5% in the year through last month, down from 7.1% in the November reading. This indicates that US inflation is gradually cooling. Nevertheless, the situation remains uncertain. It is not known yet what decision the Fed will make at the February meeting, whether it will raise the key interest rate by 50 or 25 percentage points. Today's macroeconomic calendar includes data on UK manufacturing and industrial production. The indicators are expected to decrease. In addition, Britain is set to report on gross domestic product. The UK economy is forecast to shrink by 0.3% compared to the previous quarter. On a monthly basis, GDP is anticipated to decline by 0.3% following an increase of 0.5%. If the readings are in line with the expectations, the pound sterling will most likely come under pressure and enter a correction at the end of the week. Furthermore, the euro area will release data on industrial production for November. However, it will hardly have a severe impact on market sentiment. Traders may also take notice of US macroeconomic indicators from the University of Michigan, as well as export and import price indices. Statistics from the United States are likely to be rather downbeat, which may weigh down on the dollar. Nevertheless, I assume that the general trend initiated following yesterday's US inflation data will remain intact. Thus, I recommend buying the euro and the pound sterling on a correction. From a technical point of view, the 1-hour euro-American dollar chart shows that a false breakout at 1.0810 will create a strong buy signal. In this case, the euro will have a chance of rising above 1.0863. If the price overcomes this level and tests it from the top down, it will most likely post steeper gains towards 1.0894 and then 1.0931. At the mark of 1.0931, it will be possible to go short on a rebound with a view to catching an intraday correction of 25-30 pips. Short positions at 1.0863 and 1.0894 can be considered only amid a false breakout. Alternatively, if bullish trading activity at 1.0863 is subdued, the euro may break through 1.0810 and enter a deep downward correction to 1.0768 and even 1.0728. At the level of 1.0728, traders are recommended to go long on a rebound, counting on a decline of 25-30 pips. Long positions at 1.0810 and 1.0768 will be relevant only in the event of a false breakout. As for the pound sterling, the situation is similar, and the focus of market players will be on Britain's economic output. If data is gloomy, the British pound American dollar pair will slide below 1.2158. A breakout and top-down test of this mark will increase pressure on the pound sterling, which will probably drop to 1.2093, the lower boundary of the sideways range. If the price breaks below this level, it will dip further down to 1.2008. At this mark, it would be a wise decision to go long on a rebound. Of course, the best way to make a profit is to open short positions amid a false breakout at 1.2225, provided that UK statistics turned out to be upbeat. Likewise, a false breakout at the upper boundary of the sideways range will make it possible to sell the pair. Going long will be relevant only amid a false breakout at 1.2158, the middle of the range, or at 1.2093. If bulls take control of 1.2225 by midday, its top-down test will drive the British pound up to 1.2301 and 1.2350. At the level of 1.2350, traders may go short on a rebound in the hope of an intraday correction of 35-40 pips. Short positions at 1.2301 can be considered in case of a false breakout. Good luck and have a nice weekend.